Intelligence Studio. Do subscribe and like the video.
Warren Buffett, a name that resonates deeply within the financial world. The name echoes through the halls of finance. He is a legend, a titan in the world of investing, an investor with an almost mythical status, revered for his uncanny ability to predict market trends and make astute investment decisions. People call him the Oracle of Omaha, a title that signifies his unparalleled wisdom and insight. He's known for his wisdom and his incredible success in the stock market, a success built on a foundation of careful analysis and strategic thinking. For decades, he has carefully chosen companies to invest in, meticulously evaluating their potential for growth and stability. He focuses on their long-term potential, always looking beyond the immediate gains to the future possibilities. Now, something remarkable is happening, a shift that could redefine the landscape of investing. Buffett is turning his attention to a new frontier, artificial intelligence. This move marks a significant departure from his traditional investment strategies. This move has surprised many, given Buffett's historical caution towards technology companies. For decades, Buffett avoided technology investments, famously stating in the 1990s that he did not understand technology companies well enough to invest in them. This caution was particularly evident during the dot-com bubble, where many tech stocks soared to unsustainable valuations. In 2011, Buffett made a notable investment in IBM, purchasing approximately $10.7 billion worth of shares. However, by 2018, he began to express disappointment in the investment's performance, stating that he underestimated the competitive landscape in the tech sector. IBM's stock price has struggled, trading around $150 at the time of his initial investment and dropping below $130 by 2018. He prefers businesses he understands well, those with clear, straightforward business models and a proven track record of success. One of Buffett's most famous investments, Coca-Cola, reflects his preference for businesses he understands. Buffett began buying Coca-Cola stock in 1988, and as of 2021, Berkshire Hathaway owned about 400 million shares, valued at over $20 billion. Buffett appreciates Coca-Cola's straightforward business model, selling a widely recognized beverage brand with a strong market presence and consistent demand. Businesses with a proven track record. But AI seems different. It represents a new kind of opportunity, one that is too significant to ignore. It's clear to Buffett that AI is not just another tech fad. It is a transformative force, one that has the potential to revolutionize industries and change the way we live and work. It is a transformative force. AI is poised to reshape industries from healthcare to finance, manufacturing to retail, one that will reshape industries and our world. The rise of AI represents a new era, one that promises to bring about unprecedented changes and opportunities. As Buffett delves into this new frontier, he brings with him a wealth of experience and a keen eye for potential. His involvement in AI signals a major shift in the investment landscape. The Oracle of Omaha is once again at the forefront of change, embracing the rise of the machines and the endless possibilities they bring.
Berkshire Hathaway is Warren Buffett's company. It's a massive conglomerate. Buffett originally purchased shares of Berkshire Hathaway in the early 1960s when it was a textile manufacturing company. He later regretted this decision as the textile industry was in decline. He eventually shifted the company's focus to insurance and investments, but his early investment in a declining industry was a misstep. Berkshire Hathaway owns a diverse portfolio of businesses, from insurance giants like GEICO to food companies like Dairy Queen. The company sits on a mountain of cash. Its portfolio is worth over $287 billion. This vast wealth gives Buffett immense power in the financial world. When he speaks, investors listen. And when he invests, markets move.
In recent years, Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, has made a significant move that has caught the attention of the financial world. He has strategically placed a large portion of Berkshire Hathaway's portfolio into AI-related stocks, signaling a major shift in his investment strategy. In fact, a staggering 24.1% of the portfolio is now dedicated to this burgeoning sector, which is a testament to his confidence in the potential of artificial intelligence. This is a bold statement from a man known for his cautious and calculated investment approach. It underscores a significant belief in the transformative power of AI.
One of Buffett's biggest AI bets is on a familiar name, Apple. Apple accounts for 23.2% of the value of Berkshire Hathaway's public equity portfolio. Apple is the conglomerate's biggest stock holding, and by default, also its biggest AI stock holding. The investment has been an incredible performer for Berkshire Hathaway, with Apple shares delivering a total return of more than 800% since Buffett's company first bought the stock in the first quarter of 2016. The tech giant recently rolled out its Apple Intelligence software with its iPhone 16 smartphones, and it's positioning AI as a key selling point for its next-generation mobile devices. Apple's dominant position in the mobile hardware market gives the company some big advantages in the artificial intelligence race. Thanks to its large and highly engaged mobile hardware user base, the company has access to troves of valuable data and a loyal customer base to sell add-on services to. Notably, Apple's software and services business is now on track to generate over $100 billion in annual revenue. Berkshire Hathaway has made some eye-catching moves with the Apple stock lately. Berkshire Hathaway's recently published third-quarter report revealed that the conglomerate had once again sold a significant amount of Apple stock during the period. It still owns roughly 296 million shares of Apple stock, but that's down by more than two-thirds from its peak, holding of roughly 907.6 million shares.
The second major AI investment in Berkshire Hathaway's portfolio is less known to the general public. Taiwan Semiconductor Manufacturing Company, or TSMC. TSMC is the largest semiconductor foundry in the world, controlling over 50% of the global market share in contract chip manufacturing. In 2021, TSMC reported revenue of approximately $57 billion, showcasing its dominant position and robust business model. It manufactures the advanced chips that power AI applications. These chips are the brains behind AI systems. In November 2022, Berkshire Hathaway disclosed that it had invested approximately $4.1 billion in TSMC, acquiring around 60 million shares. This investment signals Buffett's recognition of the critical role semiconductors play in technology and AI advancements. In 2023, TSMC announced plans to invest $40 billion in expanding its manufacturing capabilities in the U.S., including new facilities in Arizona. This expansion aims to bolster domestic semiconductor production and address supply chain challenges, aligning with the U.S. government's push for semiconductor independence.
Amazon has nowhere near the same amount of clout in Buffett's portfolio as Apple, accounting for only 0.7% of Berkshire Hathaway's stock holdings. Amazon has emerged as the global leader in the cloud infrastructure industry, with 31% of that market. Generative AI has become a major component of all of the major cloud players' attempts to stay competitive and capture market share. But as the leader, Amazon has the most to prove and to gain. It has released a slew of generative AI services to meet every need and budget, and it's even developing its own AI processors. Over the past few months, CEO Andy Jassy has made several mentions of how big this opportunity is. He said that about 90% of the global IT spend is still on premises, and if that equation is going to flip, there's a lot of growth ahead for AWS as the leader. He also stated that he thinks generative AI itself and AI as a whole are going to be really large. In 1993, Buffett acquired Dexter Shoe Company for $433 million in Berkshire Hathaway stock. The company struggled to compete with cheaper imports, and within a few years it lost significant market share. Buffett later admitted that this was a poor investment, particularly because the stock used for the acquisition appreciated significantly afterward, costing Berkshire billions in unrealized gains. Another notable failure in Buffett's life came when he invested about $7 billion in ConocoPhillips in 2008, just before the price of oil began to decline sharply. He purchased shares when oil prices were high, and the investment suffered as energy prices fell. Buffett later acknowledged that he misjudged the energy market, stating that he should have waited for a more favorable price. Warren Buffett once said, "You can't produce a baby in 1 month by getting 9 women pregnant." This saying emphasizes that some things in life and business take time to develop. No matter how many resources you throw at a problem, certain processes cannot be rushed. It's a reminder that patience is key in investing and in life. He also said that the best chance to deploy capital is when things are going down. Buffett suggests that during market downturns, opportunities often arise to invest in undervalued companies. When prices are low, it can be a good time to buy as long as the fundamentals of the business are strong.
And do subscribe to the channel